Hi, this is Mike Flores. Today we're going to talk about the charts of the week. I want to start with the E-mini S&P chart. Once again, as happened a few weeks ago, everyone's talking that the market is going too far and they're looking for it to crash or to go down. Now, looking at the technical picture, I don't really see a reason to believe that at the moment. We are above the 50-day and the 200-day moving averages. We're above the 20-day and the 55-day price highs. The ADX is going stronger, showing a strong trend forming. And there's really no reason to not be long these markets. So if you're long the indices, I would stay long them. Now, one thing I do want to say is we do want to pay attention to margin debt. I did talk about this before on another post. The margin debt for the past 2 months has shown decreases. And usually what happens is when the margin debt peaks, which is the amount of money borrowed to buy stocks, then the market tends to crash. And we can see that happen back in 2007 and I believe 2000. So right now we want to pay attention to see if the market does start to sell off at any point, if that has an effect due to the margin debt. But for now, stay long and strong. All right, let's have a look at the T-notes market, the 10-year Treasury notes. This is another market people were talking about. So the way it works is that bonds work inversely. So as the bond prices go up, usually the stock market goes down and vice versa. Notice the bonds are now retreating and the stocks continue to go higher. Now, this market here, though, it's a lot of noise happening. So we see we made a new high. We couldn't hold. We've traded a bit lower here, but we're still above the 50-day and the 200-day moving averages. And at the moment, I would say we're kind of in a sideways. You see, we're trading in this range still. We're at the lower point. But if we continue to go lower, that should be a good sign for stocks to continue going to the upside, because people leave bonds and go into riskier assets like stocks when they feel the economy is going well. So nothing to do in Treasury notes at the moment. We're just watching that market. Let's go to the euro dollar. Now look at this market. You can see that it's had a pretty strong move down over the past month. We're below the 50-day moving average and just below the 200-day moving average. We see that the ADX has gone blue and stronger, and it's coincided with the move lower in the euro. So this is the way I'm going to play this trade. I'm going to sell market on open with my stop at the high of this day. All right, so I'm going to sell market on open with my stop at the high of Friday. And the reason I'm doing this is because it broke and closed below the 200-day moving average. So I think that's a pretty good trade. There's whenever we break the 200-day moving average, we want to take that as a serious. We break and close below it. We want to take that as a serious note. So I'm going to put that trade on and see what happens. All right, let's go to Euro Sterling next. So we have the European currency versus the British pound. Notice here, we are below the 200-day moving average and the 50-day moving average. And we had a decent move lower over the past couple months. And I really would like to see it break back below Thursday's low. If that happens, I would look to get short for a longer term position. But what I want to bring up to your attention today is Friday's bar. Notice that the high and low of Friday's bar is within Thursday's high and Thursday's low, right? So the high of Friday is lower than the high of Thursday. The low of Friday is higher than the low of Thursday's. This is called an inside day. Friday's bar is called an inside day. This is the way I'm going to trade this one. I'm going to put in two orders. One to buy on the break of the high with the stop at the low, and one to sell on the break of the low with the stop at the high of Friday. Now, I'm going to put more weight to the downside, right? We are in a downtrend. We're below the 200-day and the 50-day moving average. And we can see the market is in a downtrend. The ADX is picking up, showing that the trend is picking back up. And I'm going to weight more to the downside. So if I put a full-size position to the downside, I put half a size position if it breaks to the upside. That's the way I'm going to trade the Euro Sterling market. Now, an inside day is usually a 1-day trade. So I usually close the trade after 24 hours and take whatever I've made or lost in that 24-hour period. Now, if it closes on low and we get short, I'd probably keep it for another day just because it's in the direction of the trend. But we'll talk about that if we get there. Next, let's have a look at sterling yen. Sterling yen, we see, is above the 200-day and 50-day moving average, and it's flirting with the 55-day high here and the 20-day high here. Notice the ADX is really down at the moment, so the trend isn't resuming, and that coincides with the price action. We can see we had this consolidation happening, and it's continuing here. So we really want to see a break of this 55-day high or this 55-day low, but I think at this point it looks like it's more geared to break towards the upside. We've had 8 up days in a row, so we may have a down day or two, but I'm looking to see for a break. I'm looking for it to break to the upside. All right, so what I would do then is I'd buy in a break of this 55-day high with my stop at the low of the day. All right, so this is something else I'm looking at. This also coincides with a strong stock market. People will buy the sterling and sell the yen as a carry trade. They'll buy the higher yielding currency and sell the weaker one. All right, let's go to crude oil. So looking at crude oil, we see here a couple things. One, currently the market is above the 50-day and 200-day moving average. 2, we notice these 2 diagonal lines that I drew, which are called a trend channel. Now, this little mini trend channel here that's happened over the past couple weeks is facing downwards. So this is the way we play this. We sell on a break of this low with our stop at the high of the trend channel. Or we could buy on a break of the high of the trend channel with our stop at the low of the trend channel. And then our take profit would be basically the distance from the low to the high. So we'd be looking for, I'm going to say roughly 2 points. 101.50, 103.70, so 2.25 points. So if we break to the downside or the upside, we're going to look for 2 points on that move. But this is something else I want to look at. If we break the 55-day high, there's a cool way I like to look at this. If we break this upside here, I buy initially here for the trend channel with my stop down here, and then if we break the 55-day high, I'll add another position. I can pyramid to the upside. Now, in all likelihood, that could happen tomorrow or the day after, but I really would love to see the ADX going up and telling me that the trend is resuming upwards for that to happen. So that's the way I would play this crude oil trade at the moment. Let's look at heating oil. Looking at the heating oil chart, we can see that it's resumed some weakness for the past week or so. We're below the 50-day, but still above the 200-day and the 200-day moving average and the 55-day and 20-day lows. So what I'm looking for here is to sell initially on the break of the 55-day low. We see the ADX is now rising, showing us that the trend is resuming, meaning this downtrend is gaining momentum. So I'll sell on a break of this low with my stop being the high of the day of the breakout. And then I'll add to that position if we can break below and close below the 200-day moving average. So that's what I'm looking for here. I'm looking for a break lower in heating oil. Let's go to gold. Looking at the gold market, I put back up here a head and shoulders that we traded earlier in the year. This trade worked out really well. We broke the neckline. We made our profits up in here when we saw the distance from the head to the neckline be met. We took profits up there. But now looking at the market, we can see the 50-day has crossed over below the 200-day moving average. And we are below both the 50-day and 200-day moving average and back below the neckline. We had a symmetrical triangle that happened here. And we broke below that. We broke below that. And we pretty much made the target for the distance from the high to the low down here. So now I'm just watching this market and stalking it. I wouldn't be getting shorter at this point, and I wouldn't be looking to get long at this point. I'm just watching this market and looking at gold and seeing that right now, if I'm short, I'm staying short. If I'm not, I'll look for a way to get short. But right now, I don't really see any reason to get short if you're not already. All right. Now let's look at this one. Let's go to high grade copper. Now, why is this market important? This market is used as a barometer by most traders to see what the overall economy is going to do. Now, why is that? Well, copper is used in making of, plumbing pipes and all types of home building. So when copper is high, people are buying copper to do more building of homes and cars and things of that nature, plumbing. So right now we can see that copper's had a rough 4 or 5 days. And we see the ADX is now just turning up in blue, meaning that the momentum of this trend is starting to take place. So if we start trading lower here, that's not good for copper, and in turn should not be good for the US stock market. Now, I showed you previously that the indices are doing very well, the E-mini S&P and the NASDAQ. So I'm going to watch this really intently to see what happens. But notice how we went down, closed near the low, we broke down, closed near the low, we broke down, closed a little lower than halfway, and we broke down and closed 3/4 of a way down. So I really want to see what happens here on Monday. If we can break below and close below this area, this zone here, that could be another move for copper down. And then we really have to watch the stock market to see if it has to play catch up. So I'm looking at this market and just stalking it for now, but not trading anything at the moment. So that's what I'm looking at for the trades for the week. These are my most important charts. As always, if you guys have any questions, comments, or concerns, or feedback, please put it on the blog. I look forward to hearing from you, and let me know what you think, what you would trade, what you wouldn't trade. I look forward to seeing you guys at one of our live events soon and hearing from you shortly. On behalf of iTradingU, this is Mike Flores. You guys have a great week. Bye.